Good afternoon. 30 seconds till close. We're finishing right where we left off. 9:30, 4 o'clock. You can basically ignore all of this. Called sideways trading. Hung out at all-time high. We melted into the high. Swung back and forth during the day. We'll see how it closes. I mean, uh, again, a mixed bag of a day. We'll take a look at tickers. It wasn't really much at close, and I didn't want to have to commentate over price just pulling into support. We generated a new support here over the last 2 days. So if you look from yesterday coming into lunch after the bid, and this sort of nice, very nice area that is across all indices. That's sort of a nice part of this is when you start to look at these last 2 days going into all-time high on S&P, the Dow, and then looking at the Nasdaq, which is below. Even though they're in different areas, when you look across the board, they're all in this very nice spot that is going to generate some support. And again, it's going to reiterate the idea here that we just had a very big buy day, a big rally. And so it's these kind of days where you just trade flat and you don't lose any points. Should have been a take profit day, right? Take profit day. Well, this is it. This was it. 1.5% yesterday on the S&P, 2% yesterday on the Nasdaq, and you had a completely flat day. But it's a bid candle. It's a very nice candle because it's so mixed. It's so mixed that when you actually look at the individual positions, and especially ones that we're looking at, they continue to do very well, and they don't really press us for making difficult decisions. We're going to talk about semiconductors. Semiconductors were definitely an area that you could be put into some kind of difficult situations. I would say that from this open this morning, we talked a lot about a lot of these tickers that are in between levels, something like ZS, right? These didn't continue to melt, so we actually we reached the high right when we got off the call. Those of you that weren't here, but just right at lunch, that was it. And then we just traded flat, swung around a couple times, but we basically traded flat on all tickers from that point. And at the end of the day, that's going to set up a trend instead of just putting all the points on at once. And I actually talked about that yesterday. There's some tickers out there that are in this position where they have an open sort of shot to the next level. There's a big difference though between price just getting there in one go or trending, and a lot of that usually affects the way in which we're going to trade it and how we're betting on it anyways. And so there's plenty of positions that how long is it going to take for something like this? Like all of these growth tickers and software companies and things that are very similar, how long is it going to take for them to get there? It's really not. It's not as simple as taking a historical look and putting it on there. Sometimes you're going to get a mixed bag, and today certainly is going to solidify a little of that because it was certainly you could have tickers in one sector or tickers all within a sector all doing completely different things today. If we look at something like semiconductors, right, you're just kind of in this interesting spot. Let's just take a look at it. So again, everything traded flat. S&P, Nasdaq, everything traded flat. Nothing really changed. Only thing was small caps were pretty bid off the start, and then they finished off a little bit of a low, but they're still break even. So it's the same thing. It's a higher low still. But anyway, let's take a look. Let's take a look at semiconductors, right? What do you do here? Well, you just got beat up on your position. You're in a position here, you got beat up, depending on where you entered. Now, most of us entered semis down here. So for instance, on UMC here, this was your take profit day. This was your take profit day. You entered over here, the 25th candle, when we were taking everything. TSM's over here as well. Today was, you just got out, and this is going to happen. Now, there is situations where you can stay in this position, but this is what I mean by you just don't really know and you can't guess. And so when you start to, let's go around the horn a little bit. You start to look, TSM's fine. TSM's fine. So you're in the TSM position, you're good. You didn't have to take profit today. You're in a fine spot. INTC. Okay, let's take a look. Oh, that's no problem at all. That's actually off of a big buy day. We expected to take profit. Still in this trend. Really nice spot. And so you start to look around. Okay, what about AMD? AMD, flat. Okay, that wasn't a decision. NVIDIA. Oops. NVIDIA. Same position. Okay, what about AMKR? We just posted. AMKR? Well, now, what are we doing here? What are we doing here now? I talked about this at open. We went very bit off the start. Went very bit off the start into the trend line. What are you doing in this position? You went bid from the start, 2% up over, and then came down. What are you doing here? What are you gonna do here? Right? If you weren't already in this position, what are you doing? And are you exiting this position? There's literally no answer that you can say correctly because it's not in a very decision making spot, and so it all comes down to where you were able to enter it. I know I just posted this AMKR, but we were already trading this because it's the more bullish ticker, but you definitely didn't enter it today. You could have maybe entered it close, but why would you enter it close when you could wait till tomorrow off of a rejection candle? If this wasn't a rejection, you could have entered it close because you want to capture that obviously that high potential of getting points off to the open since most points are there. But that's difficult there. So there are scenarios like that. I think you could consider pot stocks in a similar area where it's not exactly clear. I think someone else printed up that it was lagging a little bit. It's not so much that it's lagging, it's just the way in which it's trading. You're either in this position and you're sticking with it, or you're not doing anything with it. And so that does make things difficult when you're looking at it through the lens of trading where would I take a trade here? No, I wouldn't take a trade here. But if I'm in a trade, I would hold it. And so you're not always buying, but you could be holding. And so, and you're not selling in those situations. So that can present some difficult scenarios where, again, you have a lot doing very well, but then the market's trading flat. There's some areas where it's not about just this day, right? Today is just one day, and we had this big rally again from growth. You're going to get days where this is still a part of this move, and you don't have to do anything with the day, right? There's certain things you have to do today, absolutely, but it's just one candle, right? And this is where you could do the argument where there was yields were up at one point, and then you could say, well, yields are up, so it's stopping this. I think it's more the fact that how much is this up right from here? This was up almost. It was 8%, 8% since the 25th here. And if you put it from yesterday, that's exactly what it was in 1 week, right? And so again, you're going to get this day like this. This is a very bullish day. The fact that this did not stop, you're going to now get a day tomorrow where you get to really see how this is going to form because we just don't know how quickly, right? You could get all-time high tomorrow on the NASDAQ. You could get all-time high tomorrow on the NASDAQ if it wants to do it. We don't really have a decision, so all you can do is you're done in a position where you can manage almost any of these trades. And that's where it's important to realize when you got to take your hand off the wheel here and let your position do its thing. There's some things you're going to have to manage, right? There's some things. So if we go, let me pull it over to the loss side. Okay. Something is not a good example. That's not a good example. That's not a good example. Okay. CGC. You're definitely not in CGC. That's a good example. BJ. Are you still in BJ? Okay, you're still in BJ too. Okay, I don't have good examples. You're basically in everything, so maybe that is the best example. There's really no examples on the loss side where you exited the position. Maybe that is the fucking point, right? The point is that if you're in these positions from when we entered them, if you didn't manage the position, you're still doing well. Do you get to decide on this candle today that you're no longer in this position? You don't get to because you're still within this trend here, right? Maybe something like RXT from yesterday. What are you doing here? The best thing you can do here is not look at this position. You entered this position at this open yesterday. This is a great chart. It's a great chart, and you're in a great channel here. If you are trying to dick around with this position today, and I think we did this spiel yesterday a lot too. Just I don't want to like beat a dead horse, but when you're looking intraday, you're gonna get shaken out of these positions very easily, and then you're gonna lose points. You're gonna end up losing money at the end of the day because you're watching something intraday. Good example would be something like BA here. BA opens, and then you're going to get pushed out of this position if you're watching this because from the day yesterday, there's just no point. But if you had already entered it, there's no problem. You're still trending. You're actually gaining points every single day. It's when you look at the chart, you're no longer gaining. But on the daily candles, you're gaining every single day on a chart like this. Look at, you're actually gaining from day to day. It may seem like you're down, but that's again, you're taking it into perspective, this one candle over the entire trend itself. That's what I would say today is going to do. Now, I already talked about UNH, for instance. UNH, part of the Dow. Uh, this is already just starting a new consolidation from where we're talking about months of trending one way, right? So there are positions like that. So what I want to do though is set up for tomorrow. So we got our first stop day in this new recent rally, right? So from the 25th, we started a new rally. Tomorrow, we're going to be able to get some sort of judgment call on how exactly some of these are going to be moving, right? So when we think of the Nasdaq for growth, is growth going to go to all-time high this week? That's a question that we want to have answered. Tomorrow is definitely going to let us know in terms of timing, because you're not going to think about it, right? If tomorrow you get another flat day, that's at least going to tell us exactly how the rest of the week is going to play out. If you get a candle just like this, how's the rest of the week going to play out? It's going to play out like it always will. Thursday is going to learn it. It's going to lean into some sort of all bid Friday. And so you know that if tomorrow's a stop day, then you're going to wait till Friday, which means that those of you in short-term positions need to get out at open and wait to re-enter on Friday. If you get a bid day tomorrow, well, now you're setting up a possibility that short terms you're going to need to exit by Friday, because if you're getting all the bid by then, are you really going to be able to push something that you should be capturing the move before it happens to re-enter and transition, right? So you're going to have something tomorrow really come down to some decision making, because today there's no decisions today being made. Equities are risk on. Everything's bullish, right? You don't get to decide when there's tops. This has definitely continued going. I don't think anyone had any anxiety today. The market had zero anxiety. What we're talking about though is setting up tomorrow. Look at some of these moves over here, right? If we're looking at some of these moves, there's some of these tickers are going to put some serious points on and not have take profit days. So only Roku here. We watched this. It came up to the resistance we looked at. This is 9.5% today on a ticker like this. A lot of these growth tickers that are not part of mega caps continue to catch up and put more and more on. There's plenty more that are going to be doing that. When you look at COVID winners, big question today was COVID winners. This doesn't do anything. It's 6% today, but this is still within this consolidation here. It's tomorrow. We're only halfway through the week. If these start to go, this is going to push all-time high on the Nasdaq. If all these tickers are coming out of this here, and I've talked about a bunch of them. Another example would be those tickers in which that are on the clean energy side that have had a hard time these last couple of days, right? It's still bullish, right? This is still a bullish move here, but it stopped the rally in which the Nasdaq was still going. These reverse that and completely rebound the idea, but the problem still is here. You're still on this trend here. You still need to be able to put the points on. If those are going tomorrow, then everything is going to be gone, right? And so this is where, again, the best thing you could do today is really just sit back again. It sucks to have to sit back, but if you're in these positions and you're at least entering positions, you can sit back and let these just really carry you until there's a decision that needs to be made. There's nothing on the macro side, and there's nothing on almost any of these individual positions that's not just completely obvious, right? And completely obvious. It's only these tickers on the clean energy that I would say, and with the semiconductors that have the same sort of look here, that's difficult because they're not really connected. There's this day that stands out. It doesn't stand out on the whole total, but this one candle here on a lot of these charts does make it very difficult. I talked about this open that you just need to be involved, and you just have to, again, if you're believing in something, then you're just going to have to stick with positions. There's definitely opportunity and cost involved with being a part of some of these positions. There's a lot of charts that we've had that continue to trend up that there's really no reason why sometimes that you should be sitting in something that's not moving, right? Um, that's a judgment call, right? Things like Twitter today, we talked a lot about this move from here. These where they are puts them in it's a very interesting spot, because you're either going, and so when we talk about all these growth tickers that are in the same sort of motion, then I posted a ton of charts recently that just broke out, right? That are right here, and there's a resistance here. You're either going all-time high in the Nasdaq, so these are going to be creeping, and if you go all-time high, these are all coming here. Everything's going, right? And I talked about it with like Apple and Tesla, for instance, right? They're not at all-time high yet, but they're right there. And as soon as everything is going, these are all going to go together. You're talking about still, we have this rally already going, but you're talking about a rally that doesn't really have a stop on it. Usually we talk about, well, this can't it can't continue, right? An all-time high can't continue, but there's not really something that's stopping it here, and today should definitely be a day to think about that. There's nothing really stopping us from continuing to move. And I'll remind you of yesterday what I said. You don't put this many points on this day here on a Monday unless you have an expectation that this is going to continue through the week and into the next week and into the time after that you're going to continue through all-time high. There's no point in which you would be putting that much money on. And the one example I used was Google. I don't care what you say about antitrust cases. No institution put on long positions over here at all-time high for the first time because of an antitrust case. This is institutions betting on all of growth in mega caps, and specifically the whole equity market, if you're going to put position like that on, right? And so a day like today, there was no take profit. Look at this chart. This here, 99% of the time is going to get a take profit candle after this candle. You don't get to, you're getting away with highway robbery over here if you're already in a position. No, where is the take profit? That's 44 basis points. Nobody took profit. So who is it? Where is it? Everyone is betting it's going to go much further, are they not? Right? And I know this is just Google, but think about it. What does this really mean? And so, again, when we go into tomorrow and continue the week, you got to be continuing to look a lot further out and really let yourself have time. I think a lot of options out there, people really cut their legs off and they do not have room to run. This could create some interesting areas in which the squeeze comes in right here into the April monthlies, but then you have this new sort of having to transition period where everyone's going to now get back in. You could get an oversupply of calls because we had less volume this month comparatively to March, which is ironic because we just got Stimmy and Biden bucks coming out, right? Where's that money? We didn't see it. That might be a failure of trading and buying the wrong contracts and cutting the legs off because, again, those should be, you should see it. There should be more. Institutions are buying more. We'll see. Okay, one big thing going in tomorrow is China. Things like Bob. I posted, Bob had a hammer here. This is a nice trade for today, but it's so hard to look at this and visualize what's possible here. And it's the same thing with all of the Chinese tickers. When you start to look around, these are, I think still, this is one of the best opportunities we have in the market right now, are these Chinese tech companies that they look terrible. It's just terrible. The chart looks like Facebook 2.0, but worse. It's worse than Facebook. The Facebook chart from before it started breaking out. This is even worse, okay? And when you start to look at some of these charts, the JD chart was just terrible. It's just terrible. Besides the movement in here, this is some pretty bad stuff. I'm really looking for, again, that Hang Seng chart. When you look at this, I'm really looking for this to continue here. Today was a good day. This is again, it wasn't open, so this was a very nice start here. Excuse me. Going into today with the numbers that we have from China, there's an expectation of very good futures market coming through because of what we have on. I love how I just put it backwards because they're more opposite. These tickers today are signaling a very good start to the Hang Seng. That's how it's supposed to be. These candles here, these are not related to our equity market. They're related to China's, and this is leading the day over there for today. So the Hang Seng, if that's going to continue, is going to propel these, just like if we talk about the NASDAQ going all-time high, it'll propel those NASDAQ tickers that are behind. If all of these Chinese tickers are starting off pretty hot this week, and we're going to have the Hang Seng getting going and coming off of that low, what do you think it's going to do to all of those tickers, right? What do you think it's going to do when this opens up here and this gets going? It's got a lot of points it can recover, and again, it's lost a lot of time, but nothing changed that whole time. It's just regulation. there's so many points to be made on some of these charts. Something like Billy, that was traditionally a very trendy chart, it already looks good here. Think about if you get another one of these trends, thousands of percent. It's thousands of percent, right? On the options, it's thousands of percent because of the way the way it trades. There's so much risk involved because it's connected to a ticker on another exchange. Again, uh, this price action, the way in which it's every single open, it has to go and benchmark to the other ticker on the other exchange, just like you can see like a gold ETF benchmarks against gold. Gold's 24 hours. ETFs are only on the equity side, so they have to benchmark that first opening candle. These tickers offer a lot of risk, but there's nothing inherently risky about it comparatively, right? It just happens to be trading globally, which again, it just gives you more exposure. There's more reward to be had there. I still think these are going to be. Uh, I think it's a must. It's just a must, and we preempted it at the same time as the rest of tickers in most cases, and so I would just keep watching those. So those of you that are not here, there's plenty of points to be had there, and there's going to be plenty of pullbacks and everything else. But uh, I do think that those are not in the right spot. Neo would be another example. This is difficult though. I just don't. Uh, I already talked about it with some of the EV moves being a little bit lagged. It's just you have to wait for some of these, and so some of them have broken in such a way that there's a trend, and that makes it straightforward. Something like Neo here is not straightforward. You either have confidence and you push that position or not. Neo's not the same as Tesla. It's not trading the same way. You can't just make up whatever you want. The EVs look good. American EVs, Ford, obviously not fully EV, but we're putting it with EVs. Had a nice day again today. Talked about how yesterday you really wanted to get involved and get in there if you can. Today didn't really present the opportunity. Today, if you weren't already in the position, I find it very hard to believe that anyone was able to buy this today. I would say you're out of your mind. If you weren't able to get this yesterday, yeah, you didn't get it today. So that's for sure. And when are you gonna get it? Right? When are you gonna get it? I mean, some of you are gonna be like, "Well, I bought it today, Don. What are you talking about?" Then good for you. You're an absolute. You are a master class, right? You're very good. Uh, CCL travel continued the move. There's nothing really to see on any of travel. I thought we were going to see something a little interesting today. CCL has earnings. What are they going to earn? What do they got? They got more T-shirt sales. More. They're going to move. They told CDC they're going to move the boats somewhere else if they don't stop with the regulation. It's a dance. Who cares? What are they going to do? They're going to swan dance with the fucking boats and give us a show. I mean, you guys are going to have to wait. You're going to have to wait. So it doesn't really matter, right? And so again, travel still looks good. You have to. I talked about it multiple days now. You have to just stick with this position. It's so hard to, if you're not in this position at anywhere on this candle. If you entered anywhere on this candle, then it should be more straightforward. But it is hard if you're looking at P&L every day. And if you have April monthlies, then why are you in this position still? What are you doing? Uh, Again, short-term contracts, please. Just you got to be a little bit. You got to be a little bit quicker. If you're in something that is that short-term, finishes in a couple weeks, as soon as there's any sort of red, you have to get out of that position, right? You have to get out of that position. Example today, just to give a quick shout to this chart, the GRBK chart. Now, home builders did not all move the same way. They've all been trending very much, but this big bid day here, right? A day like this, what I did was I took the profit on my short terms, and I'm gonna keep pushing the longer term contract. Give it a chance to get climbed in here. But the short terms, you're basically losing everything. You just lose everything if you just lost 2.5% there. It doesn't even matter that if it didn't lose anything and it went here, then it would be a completely different story. It's the fact that it went up to here and then came down. And if it comes down even just a point tomorrow, it's going to lose a ton on those short-term contracts because you're no longer get the move. There's already an expectation on the price. The price is speculating before the move happens, right? You take profit on it, right? And that's such a different understanding than push your winnings, man. Stop cutting your legs off. Well, if you have a short-term contract, you have to get out as soon as you get into that resistance. sometimes before. You need to trust the level, uh, and say, well, okay, if the level's there, then it's going to get rejected. Then I'm going to sell it before it hits that, so I can get maximum value. Right? That's that's probably a good example of something today. Uh, what I want to mention. Okay, uh, the solar thing and clean energy thing. I talked about these candles here. In terms of these position being, how exactly is it working with the macro? I think there's certainly a lot going on, and I talked about this today. Is the crude on the crude side? We can say that in the long term, this will undoubtedly go up. It's already peaked in terms of demand for oil. We already understand that, but it's going to be very difficult to stop the cycle that's happening in commodities, the super cycle idea. I would say without a doubt in the long term, this is going up. But I talked about it today. The short term is very much up in the air. It is certainly affecting the clean energy side as well. Why? It just happens to be that those companies, they're all sort of a mixed bag together. They're it's I don't know why they're not separated in some sort of way, but they're very much in connection with each other. It's mostly an institution thing because institutions still trade it. It's all the same, right? It's all the same. And so what I would say is for these, it's it's kind of it's in a spot where it's too difficult to judge, and so you're gonna have to you're basically making a call on, do you believe this is going to go up in the future? So then buy something equivalent to that. So buy something months out, not short term. When you get the next move going, when is that going to be? You don't have to rush. And so what I would say is you don't have to rush. There's one thing, if you're in these, if you entered the positions over here when we preempted everything, you're not in that position anymore. No one's in that position anymore. There's no way. I just don't see it in a lot of these situations. Sun Power, you're in this position? No, it looks fucking terrible. It's terrible. This is way too much short-term volatility. There's no direction. You're not in that position. You're out of your mind. It's still such a good position to go get them, but these kind of trades you don't want to sit in. You just don't want to sit in. And so I'm not going to, opportunity cost, we're not going to take these trades when there's so many things out there that every single day we can just make one trade and go do something. What I would say is that if you want to get involved in some of these things, you can go get involved on the ARC side. And I think today gives it some much better confidence in terms of what you did with price action today. And so we're going to be looking for ARC. I posted 3 ARC charts. Obviously, I'm not bullshitting on them. I talked about this was definitely a bear, pretty bearish. I mean, obviously super bearish. It was not good. I think there was a lot of things that were said and done, and then you got some outflows because of that. I expect inflows here, and they had like the COO on talking about liquidity and things like that. The way in which these are going to move is very much in the same sense that equities are going to appreciate because of what's going on. And I do continue to foresee that ETFs are going to be big liquidity sucks. Like succubists of fucking liquidity, right? They are taking flows even when they're losing value. And it's one of those difficult things to I mean, you can't really, you can put it in numbers of how much money's flowing, but you don't really get a good sense of how that continues because it's so different day to day. And a lot of this price action has nothing to do with behavioral anything. It's all about the flow. I do expect that ARC, just like I did over here, that this is going to get the flow again because it's consistent. Flows are consistent, and it's going to get more flows. It's ETF. They're good ETFs. It doesn't matter if the companies are good or not. It doesn't matter. It's the idea that matters. It's not Kathy that matters. It's the idea of Kathy that matters. So, things can be said and things can be done. It's the way liquidity works. It's there's the demand's not going anywhere. Demand is everywhere. The supply will change, and so things will get uh, constrained, and there's just always more demand, and demand will come in and push price up. I do expect that these will go, Tesla to go, all these things, and I expect all of equities to keep going. we can sit here and talk all day about picking stocks all we want, but if you just throw money into the market, you're going to make money. That's the fucking reality. That's why we use the Dow. You know what the Dow is? It's the everything. It's the everybody's index. The Dow is the everybody's index. Every kind of ticker's in the Dow. And guess what? You throw money in the Dow, equities go up. I mean, we can sit here and I can be like, well, if you are out here timing these trades, right? You catch this breakout, you're gonna make hundreds of percent. Sometimes you're gonna make more than that. You're gonna make a shit ton of money in a couple days. Those do not come all the time, and so we have to find those. But overall, it doesn't really matter. You just have to do it. You just have, as long as you put the money in and you make the trade and have the confidence to do it, you're gonna make the money. And you let things keep running and push the trade and have some confidence with it. Don't let it, don't lose too much on it. You're gonna make money when equities are all going up. The reality is everything's going up. Everything's going up. So if everything's moving with the average, then it doesn't really matter what you do as long as you do something, right? So that's the one thing I want to leave you guys off with. Is like, I can sit here and talk about some of these tickers, like, oh man, you guys missed this and you didn't do this, and oh, I missed that, but at the end of the day, there's a reason why I posted so many damn charts. Is because everything's breaking out. So it's important to remember that when everything is breaking out, you can't then go and say, well, I made this much money because I traded this specific thing, right? And that's where, I'll even catch myself and be like, wow, I made some really good trades here. And then you just look at the market and you go, well, everything's fucking going up. I could have literally done anything. What am I thinking I'm doing so well here, right? You keep that in mind, because again, that's how that form and that idea, you know what that turns you into? Everybody's a great stock picker when the market's going up, right? When equities are bullish, everyone's a great stock picker. You know what happens when prices are going down? Everyone sucks at picking how to manage their risk, because no one's managing risk when prices are going up, because they're just great stock pickers. You don't have to worry about risk. Prices are going up, right? Prices are going up. All you have to do is pick stocks, right? Pick stocks. You don't manage risk. And then as soon as prices go down, everyone all of a sudden is really bad. It's not the picking stocks part, it's the managing risk part. Again, it's always just managing risk. So as soon as prices come down through here, wherever it happens, it's not about it's about the risk part. And that's where the consistently comes in, because it's not that when the prices are going up, it's about picking stocks well, because when prices are going down, it's not about picking the right stocks. It's about the risk. That's the same as when it's going up too. And so it doesn't change. And so it's the feeling, you want to somehow find a way to find an equilibrium of the feeling between picking things and then the risk involved, and realize that these are all sort of one and the same, and that we're just sort of getting an equilibrium between those two ideas, whether the market's going up or down, and we're making decisions based on that. And so I want us to, that's the staying humble part, where I had a chuckle with Kathy, where Kathy said when prices are going down, it gets you humble. Well, it should just be the same all the damn time, because we're not doing anything different. Sure, if you are the majority owner of something, losing a lot is going to really, really beat you up, because you're losing net worth. But again, you shouldn't be getting more excited in a different way and then do something differently because you're over here. It's just, you just have to realize, okay, well, you can just make money on anything here, but it doesn't change the fact that my risks are always going to be involved, and it's getting riskier and riskier every time, right? And so even as things get consistent, this is where it's, I can even feel myself when I find so many different breakouts and look at them. You just kind of, it does set this sort of tone, and it makes you tone deaf to the next move when things are like this. And so just remember what we're doing in terms of risks. The risks is why we make the money in the first place, right? If you're doing something that doesn't have risk in it, it's not going to be rewarding. It's just not going to be. So if we're trading things that have sort of this idea that there is no risk, then maybe it's not the right thing. maybe that's not the trade. And so I want us to keep, that's our humbling factor, is that, okay, we're making money, but isn't it too easy? Sometimes it's too easy, and that's when you know it's time to go let someone else buy from you and go find something that's more difficult, find something that's hard, right? And that's where institutions do very well, and that's where we want to operate, is in that sort of zone where we want to make things that are difficult because that's where the money is. So these charts that are a little bit more like this is more difficult than here. So I have been posting more difficult charts, and I talked about it. These are not easy to stick in this position. It's not easy. It's not easy, and you just have to be ready for it, right? Uh, just remember, right? Everyone makes money when the market's going up. Everyone's pensions are going up. But if we're going to be short-term traders and operate in that space, uh, and you're going to need to make more than, first of all, the shares. You're going to need to make more than the 12% a year and make more than what the market's doing right now, which is like 20%. You're going to have to make more than that, which means you have to take on more risk, which means you can't be doing what everyone else is doing. And if everyone is saying buy everything, then okay, we're going to take that into account, but we need to be buying the things that not everyone else is buying. Otherwise, it doesn't, we can just be putting our fucking money in a Vanguard, right? So keep that in mind, especially when you look at tickers and there's certain ones that you like. I always feel bad when I want to just like go trade Apple or something. I just feel bad because I know Joe Schmo from next door is doing the same thing on his fucking iPad and he can't even see. And he's over there tapping away buying fucking Apple. And okay, we'll all make money on it, but there's just something about this trade that's just it's not the other trade, right? It's not the trade that it's not the trade that not everyone sees, right? And you want to be involved with those because that's where the points are. That's where you see a ticker go up 2%, but then there's some options there that made hundreds of percent, and you're like, what the fuck happened there? Because no one expected it, right? But there's something technical there that we can solve. Still look for those, right? Keep that in mind. Let me take a look at profit. Get us out of here. There's gonna be some interesting stuff from tonight because I have some interesting ideas already. So that's why I'm segueing it into we need to start thinking outside the box a little bit more because I posted like 150 charts in the last week, and uh, it's not that it's good to have that repetition and discipline there, but some of the plays are too I wouldn't want to say they are organic in the sense that they're moving naturally, but I want things that are just they're just fucking different, right? LSU $400. C Trader minus 360. Spoon 1.4%. If you take profit, some new entries. Okay. Glizzy, the Brian 87 swing from yesterday. New positions added today. Okay. Sounded like he was at the gym again today. That's the way to do it. You go to the gym, exercise, good for your brain. Those of you that haven't got off your ass, get off your ass. You want to make money? Get off your ass. You have to be on the Peloton. Nice numbers, guys. I wouldn't say today was a completely break-even day. The only way you did something is if you got active and made some trades, made some money on some of those trades I brought up earlier. I do want to warn, like, still things of like Amazon and stuff. I post these charts. Remember what I've said. You really need to get past these levels. And there wasn't really trades to be made down here, so don't let hindsight capital dictate some of your thought process on some of these. They're just, a lot of them don't have opportunity. Things like squaring, remember how much is available in here, but remember the timing. There's a lot of issues on timing. You're going to have to bet in a very sort of specific way for these, or else you won't make money on them. So you have to be betting violently on these, as in they're making the move now. And that's where, again, that's what we're looking for tomorrow, is a continuation of these moves. If something like squaring gets taken profit tomorrow, I'm out of the position. I'm done with the position because it's going against the whole idea of what should be happening right now. And yeah, maybe we'll get back into it after it like pulls back and sits around. Nothing has the luxury of sitting around right now when everything is buying, right? And so we don't have the luxury to sit on positions if they're not moving. So every time I post a chart, this is the shit I want. I want to break out immediately after the chart. Otherwise, I'm wasting my fucking time, right? You're wasting your time in a position. Now, again, that's because you could just go sit in a Vanguard and make a nice, comfy 12% a year on your money or whatever it is, right? So if your positions are not jumping off the page as soon as it happens. Yeah, I post this chart and it's not going, or at least in the next few days, it obviously has like a support buy that you're going and you're ramping off of. If there's not something obvious and it doesn't immediately strike you as a trade, then it's not the trade, right? That's just not the trade. It should be obvious. And, I wanted to really like look at the spot move, right? This is a great breakout. It's obvious. It's not easy though, not easy, but you stick with it. It's a great trade. These type of trades, right? Yeah, we definitely have to keep being perfect, right? You got to be perfect. Don't fall away from the value trade, of course. I think that goes without saying. We're at all time high. These tickers, they do not get beat up on the downside. That's the one thing. Growth will get beat up. You're in a position, you will lose 50% of your value if the thing goes down 1% or 2, right? Value won't do that to you. The S&P joke of the S&P won't go down 40% in an hour. You stick with these plays, you'll keep making money. So figure out your damn risks. Get your risks already. Pray for the Roku position that we can get paid on these April monthlies I picked up, because I'm expecting some points to come in here, maybe 400 by April monthly date. uh, either way, there's a lot of good positions out there. Definitely. I don't know, a day that should be interesting and things to look back on. I have plenty of charts to look at. I don't know if, again, my charts tonight, I think I'm going to be a little bit more, I'm going to try to get as many of the breakout things. So I know I've been posting a lot of charts. They're not all to be traded, obviously. I'm going to try to bang out, if I do see them, I'm not going to be like, well, I'm not going to chart that because I have a different idea. I'm still going to do it, but maybe I'll make a better emphasis of whether I'm just trying to be like, oh, I spotted a pattern. And whether I'm like, yeah, this is what I really want to fucking buy. Remember, I rank them in order, and usually I've been pretty consistent on being careful on ranking them in order of what I would actually trade, right? And so you'll always see like the ETFs near the bottom, right? Keep that in mind, that those things at the top is what I'm looking more towards. That doesn't mean what's at the bottom I'm not going to trade, right? I just mean in terms of what's going to make an overall move and what the pattern is sort of signifying. But maybe I'll make a little bit more of an emphasis and say something, because I do want us to be a little bit more specific on individual charts, because I would be a hypocrite for saying that it only takes one trade and then I offer 100 trades a day. So there are 100 trades today, but one of those trades is going to be the trade. So you guys, I mean, it's one thing for me to, again, I'm doing it for my fucking self, but if I'm going to make 100 trades in a day, which I would say, I do, but some of you are just going to make one trade and you want one trade. Well, let me give it to you a little better, right? It's hard for me to sit here and talk intraday. If we already have the plan before the day, great. The yes or no trade, well, let's see if it's there. And at the open, we'll make the damn trade, right? We can all get in there together. Maybe we'll fuel each other's positions a little bit more. We've had some pretty good success with artificial trades, squeezing things. April monthly dates coming up. Keep that in mind. We're probably going to squeeze something else. If you guys have a ticker in mind you want to squeeze, get involved. Put something in chat. Say there's barely any options on this damn thing. You want to go squeeze SeaWorld? We'll get Free Willy going, whatever you want to do. That's not a group project, I'm just saying. Those are the kind of things that it transcends markets, right? It's something, there's something else. It's just something else, right? And so we want those out of the box ideas. There's more. If you guys have noticed, there's long-term contracts that are making more percent than the shorter term. Why? Well, fucking figure it out. What's going on? I've had plenty of options that I bought longer dated calls and I'm making significantly more than shorter term. You see things like that, bring it up. We'll make money. We'll make some goddamn money. You got positions that are putting more? Let me know and I'll buy the damn thing from you, right? You guys have some good idea, fucking tell me. Especially like anything options related. There's so many things that it doesn't matter what your knowledge is before, it's just seeing it in the moment. Opportunities don't come from like 10 years ago, they come from tomorrow, right? So I think some of you, when you're watching, if you see something that stands out, we don't all have eyes to look at everything all day, right? So definitely bring it up, get active. It will pay off because we've had days here this last couple, I don't know, I would say the last week or so, we haven't been that active because we sort of got really preemptive, and I think everyone just kind of feels tired from just kind of, you get active and then you don't really have to do anything. Don't let that sleep on finding opportunities because it might be a better opportunity than the one we have now because ours might be ending, right? You never know when it's over, and it's time to get something new, right? I'm always in for the new thing. So stay active, bring something cool. You don't have to, no pressure, but just bring it up because it does, that does generate uh, interesting conversation and interesting new positions. And it seems like when people are more active, even here on the floor, people make better trades and do better. So if it's, you guys are all a fucking echo chamber. You guys are all, if one of you is doing bad, everyone's doing bad. Someone's doing good, that person might make everyone better. You guys are all, it's very similar, and sometimes with me as well. So you got critiques from me, definitely let me know. Uh, Again, it's not easy, but we're just trying to, we're simple, we're simple people trying to make it, right? We don't have to worry about $10 million taxes that they keep putting on wealthy, but maybe one day if we keep going, right? I'll see you guys in the morning. Again, I have some stuff going on. I'll be here. Enjoy your night, your evening, your afternoon, wherever you are. Today was a lot of fun, and I'll see you tomorrow.